RateScope here. CME is hiking margins again. Second increase in just 3 days. The first hike came on January 28th. Now, effective Monday, February 2nd, that's tomorrow, CME is raising maintenance margin requirements again. From the levels set just 72 hours ago, gold margins are jumping another 33%, silver another 36%, platinum another 25%, palladium another 14%. These are sequential increases on top of the previous hike. The cost to hold a silver contract went from around $25,000 before the first hike to around $66,000 after January 28th, and now it's going even higher Monday. They are desperate, and tomorrow's opening is going to be absolutely critical. Here's what makes Monday even more insane. Over the past week, it has become difficult to near impossible to source physical silver. BullionStar founder Torgny Persson posted a trading update Saturday, stating it remains uncertain whether they will be able to acquire any additional silver inventory at all. Golden State Mint shut down silver sales for the weekend, not able to secure silver. The last time this occurred was during the COVID panic. The UK's largest precious metals refiner and retail dealer, Baird & Co., has shut down online sales. The physical silver market is dislocating from the paper market, and Monday's opening will tell us if paper can hold or if this breaks completely. One important thing for the new people here before we go further: I don't sell signals, mentorships, memberships, or anything. If anyone claims otherwise, block them. I just share the raw picture here. I don't sell hype, fear, or greed. I've received so many messages from you saying this content helps you see both sides of the market, understand the data, know what's really happening, and make better decisions. I am only on X and YouTube. As many of you know, my handle on both is RateScope. That's the only way you know it's really me. I am not responsible for any other source. Protect yourself. I will never sell you anything. Now, I want to hear from you. Comment down below with RateScope and your outlook. What do you think silver will do next week? What's your gut telling you for Monday? Let's connect everything we've discussed this week to what's happening right now. Friday, we had the metals crash. Silver down 31%, biggest daily loss on record. I showed you JP Morgan closed 633 silver short contracts at the exact bottom. They timed it perfectly. They exited. We discussed Kevin Warsh as Fed chair. Anti-QE, rate cuts with balance sheet reduction. Markets sold off on that policy shift away from unlimited liquidity. Now CME hikes margins for the second time in 72 hours, coming right after massive volatility and some of the sharpest price drops we've seen. The official line is better risk coverage, but traders see the size and the timing as a deliberate move to squeeze out over-leveraged long positions. The cost to keep positions open is about to get much more expensive, which could trigger more forced selling or violent swings. Either way, here's what I'm watching. Shanghai spot silver is currently at 122.13. COMEX is at 85.33. The Shanghai premium is 36.80. That's a 43.13% premium. On China's largest e-commerce platform, JD.com, gold bars are selling for approximately 50 cents 20 per ounce. Physical silver bars are listed at 163.35 per ounce. That's a 91% premium to US COMEX prices. Let me say that again. JD.com silver at 163, COMEX at 85, a 91% premium. The gap to fundamental silver is at its widest now. Silver should be around 130 according to supply-demand fundamentals. Every time we've seen a 30% discount from fundamentals, silver bounced back. Silver backwardation needs to resolve. You can't have physical trading at 91% premiums while paper crashes. One of these markets is wrong, and the physical market is screaming, it's paper that's wrong. BullionStar, difficult to near impossible to source physical silver. Golden State Mint, shut down, not able to secure silver. Baird & Cumbers UK, shut down online sales. Throughout this period of market revaluation, dealers have witnessed extreme and unprecedented physical demand. At the same time, replenishment options have become increasingly scarce with physical metals drying up and mints operating under enormous backlogs. In such an environment of constrained supply and sustained physical demand, sharp price declines in the paper markets are difficult to reconcile with the realities of the physical precious metals market. That's the direct quote from BullionStar. physical demand extreme, supply constrained, mints backed up, and paper crashes 31%. This is the disconnect we've been tracking all week, and Monday's opening will test if it can continue or if it breaks. Now let's talk about Bitcoin, because in my previous video I said, watch if Bitcoin closes the weekend above 82 or falls below. If it closes above 82, that's bullish for Monday. It closed at 78. That's my personal view, but it's looking weak. Bitcoin is at 78 right now. If Monday's opening doesn't show strength, Bitcoin could drop to 74 or below. And if Bitcoin breaks 74, Michael Saylor goes underwater. That's a psychological level that could trigger more selling across crypto and risk assets. So the Asian opening tonight matters more than anything. Shanghai futures, Hong Kong markets, Tokyo. They open first. If Shanghai silver holds at 122 or rises while COMEX is closed, that tells you physical is not panicking despite the margin hikes. If Shanghai gaps down and follows COMEX lower, that tells you the selling pressure is global. The Asian Open sets the tone for Monday. Looking at the numbers, about 75% of you watching aren't subscribed. If this unfiltered real-time analysis is cutting through the noise, giving you a clearer edge and the whole story from both sides, and helping you make better decisions, hit subscribe. That's how we grow a community built on truth, not hype. If this adds value, drop RateScope in the comments. It helps us see what matters to you and keeps this channel anchored in reality. If it's not for you, no hard feelings. I don't chase empty metrics. I'm here for those who want clarity over the polished hype from the mainstream. I won't tell you it's going to the moon, and I won't tell you it's going to zero. I'm here for the people who want clarity and substance, not the scripted shallow talk you'll find everywhere else. We're seeing two completely opposite realities. Paper reality, CME hiking margins twice in 3 days. Silver down 31% Friday. Warsh picked as Fed chair, anti-QE and bearish on metals according to policy analysis. Dow futures down 300 points as the Warsh sell-off continues. Options traders now the most bearish on the US dollar in history. Physical reality, silver 9 straight months green, longest winning streak in history. Gold 7 straight months green, longest streak in history. Dealers shutting down because they can't source metal. Shanghai premium 43%, JD.com premium 91%. China's gold imports from Russia at a record high. Physical demand extreme and unprecedented according to dealers. One of these realities is going to overwhelm the other on Monday. Either the paper margin hikes force more liquidation and paper wins short term, or the physical scarcity becomes undeniable and paper loses credibility. Monday's opening will tell us which one. And then there's Iran. The Americans should know if they start a war. This time it will be a regional war. That's the direct quote from Khamenei. The U.S. has deployed troops and warships toward Iran. Qatar's foreign minister delivered a final message to Iran's supreme leader. The response, "We will not start a war, nor do we wish to attack any country, but our people will deliver a powerful blow to anyone who attacks them." Rising geopolitical tensions in the Middle East could be another catalyst for precious metals. If tensions escalate overnight or Monday morning, safe haven flows could override the margin hike selling pressure. Now let's address both scenarios for Monday, because this is binary. Bearish case first, CME margin hikes take effect Monday. Traders who survived Friday's crash now need to post 33% more capital for gold and 36% more for silver. If they can't, forced liquidation, more selling. Paper price drops further despite physical scarcity. The move in prices Friday felt like forced liquidation versus fundamental selling. Monday could be more of the same. Bitcoin at 78, looking weak. If it breaks 74, Saylor goes underwater, crypto sells off more. Risk-off sentiment spreads to all assets. Asian markets gap down. European markets follow. US markets open weak. Dow futures already down 300 points. The selling cascades. Warsh policy analysis says extreme bearish on metals. A stronger US dollar makes metals more expensive for international buyers. The primary reason for holding gold, hedge against money printing, diminishes if the Fed shrinks the balance sheet and turns off the printing press. Iran tensions could escalate. Any military incident triggers panic selling before safe haven buying kicks in. Phase 1 liquidation continues. Everything sells as people scramble for cash. Margin calls hit across all asset classes. The 15 trillion that got erased Friday could turn into 20 trillion Monday as contagion spreads. This is the bearish scenario. Paper overwhelms physical short-term, more pain before any recovery. But here's the bullish case. JP Morgan covered shorts Friday at the bottom. Large banks exited. Short interest is lower now. Less suppression on the next move up. Physical holders in China and India refuse to sell at $78.90. They're holding. Dealers can't source metal. Mints are backed up. This creates a solid floor. The physical reality can't be ignored forever. CME margin hikes might be the last desperate move. They're protecting clearing firms from a player who may be in trouble. After this, if physical demand doesn't break, if Shanghai premiums stay at 43%, if JD.com stays at 91%, the COMEX pricing system loses all credibility. Monday could be the inflection point where physical wins. Silver, 9 straight months green. Gold, 7 straight months green. Longest winning streaks in history. Friday's 31% crash didn't break the bull market. It was forced liquidation, not fundamental selling. Every time we've seen 30% discounts from fundamentals, silver bounced back. History says this is a buying opportunity, not the end. Bitcoin at 78. If Asian markets stabilize, if Bitcoin holds and bounces back toward 82, 85 Monday morning, that shifts sentiment. Risk on returns. Crypto stabilizes. The liquidation stops. Iran tensions could de-escalate if diplomacy works. The message Qatar delivered could lead to a deal. No military strikes. Geopolitical premium comes out. Markets rebound. Financial conditions index is down to 98.3, lowest since early 2022. Financial conditions are loosening. The Fed has cut rates by 175 basis points since September 2024. The dollar is down 12% in 12 months. Investment-grade credit spreads are the tightest since 1998. Financial conditions are back to pre-rate hike levels. Asset owners are winning. This is the macro backdrop that supports higher asset prices once the forced liquidation stops. And here's Warsh's actual nuance. Markets may see him as a hawk. His actual stance is complex. He's bullish on AI and productivity. He believes AI-driven productivity gains allow the economy to grow rapidly without triggering inflation. This gives him cover to support rate cuts even if the economy is strong. He's not as bearish as the knee-jerk reaction suggests. He wants rate cuts. He just wants balance sheet discipline too. Rate cuts without QE might hurt short-term liquidity, but it's not the end of the bull market. So Monday comes down to this. Asian opening tonight, Bitcoin action overnight, Iran news, and whether the CME margin hikes trigger more forced selling or if physical scarcity finally overwhelms paper manipulation. I'm watching Shanghai futures closely. If Shanghai silver holds at 122 or rises, that's bullish. If it gaps down hard, that's bearish. Bitcoin needs to hold 78 at minimum. If it breaks 74, that's a problem. Iran needs to stay diplomatic. Any military escalation Monday morning changes everything. Where does this leave us? 3 key takeaways and we're out. Number 1, CME margin hike. Second time in 3 days. Gold up 33%, silver up 36% effective Monday. This could force more liquidation, or it could be the final desperate move before physical wins. Physical dealers shut down. BullionStar can't source. Golden State Mint can't secure. Baird UK closed online sales. Shanghai premium 43%. JD.com premium 91%. Paper and physical are completely disconnected. Monday's opening decides which reality wins. Number 2, Bitcoin at 78 looking weak after I said watch for a close above 82. That's my personal view. If Monday doesn't show strength, 74 or below becomes possible. Asian opening tonight matters more than anything. Shanghai futures, Hong Kong, Tokyo open first. They set the tone. If Shanghai silver holds or rises, bullish. If it gaps down, bearish. The next 12 hours before U.S. markets open Monday will tell us everything. Number 3, Warsh's policy is more nuanced than the initial bearish reaction. He's dovish on rates, bullish on AI productivity, but disciplined on the balance sheet. Not as extremely bearish on metals as the Friday sell-off suggested. Iran tensions could escalate or de-escalate. 9 straight months green for silver, 7 for gold. longest streaks in history. Friday was forced liquidation, not fundamentals. History says 30% discounts from fundamentals bounce back, but Monday's opening will confirm or deny that pattern. The unresolved tension is this: physical scarcity at extreme levels, dealers shutting down, premiums at 43 to 91%, but paper margins hiked twice in 3 days, forcing more selling. Bitcoin weak at 78, Iran tensions high. Monday opens with all these forces converging. Does physical reality finally overwhelm paper manipulation, or does one more wave of forced selling come first before the snapback? This is the most critical opening we've had all year. Asian markets tonight, US markets Monday morning. Everything we've tracked this week, JP Morgan exiting, Warsh policy, physical scarcity, margin hikes, Iran tensions, all comes to a head tomorrow. Stay sharp. Watch the data. The next 24 hours will determine if this was the final flush or if we see one more leg down before physical wins. Do your own due diligence. Understand the risks. Be accountable for your own decisions. Have a clear plan and know your time frames. Are you trading on an hourly chart or investing on a yearly thesis? Plan and position accordingly. If you're over-leveraged, margin hikes will force you out regardless of the long-term outlook. But if you're positioned appropriately and understand what's happening, maybe you're stacking and waiting for it to drop more to stack further, like many here who have been accumulating for decades and know what they're doing, then let's see what Monday's opening brings. Time will tell. If you are new here and don't have a plan, these volatile environments can destroy you. Invest with logic, not hype. Use your brain. Don't follow anyone blindly. RateScope out. Here's what makes Monday even more insane. Over the past week, it has become difficult to near impossible to source physical silver. BullionStar founder Torney Person posted a trading update Saturday, stating it remains uncertain whether they will be able to acquire any additional silver inventory at all. Golden State Mint shut down silver sales for the weekend, not able to secure silver. The last time this occurred was during the COVID panic. The UK's largest precious metals refiner and retail dealer, Baird and Co. has shut down online sales. The physical silver market is dislocating from the paper market, and Monday's opening will tell us if paper can hold or if this breaks completely. Here's what makes Monday even more insane. Over the past week, it has become difficult to near impossible to source physical silver. BullionStar founder Torney Person posted a trading update Saturday stating it remains uncertain whether they will be able to acquire any additional silver inventory at all. Golden State Mint shut down silver sales for the weekend, not able to secure silver. The last time this occurred was during the COVID panic. The UK's largest precious metals refiner and retail dealer, Baird & Co. has shut down online sales. The physical silver market is dislocating from the paper market, and Monday's opening will tell us if paper can hold or if this breaks completely.